Good afternoon. Hello? 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 Mic. Check. Can I get the mic? The mic. Great. Good afternoon, ladies and gentlemen. Good afternoon, and welcome to our 2025 Energy Infrastructure and Sustainable Finance Roundtable. My name is Tamer Ahmad, and I'm the CEO of LatAm Finance. We're delighted to be able to convene this event again this year, thanks to our sponsors, Santander, CAF, and IDB Invest. We're very grateful to them for their continued support, just as we are, of course, to all our speakers and all of you for taking the time to participate today. We'll be discussing a range of issues in our headline panel shortly. We're thrilled to have such a distinguished group of experts to tackle some of the big issues facing the marketplace. Following the main panel, we're going to also hear from two key players in the region's energy and telecom sector, respectively, with some forward-looking quick takes on the markets that present huge opportunities for investment in the coming years. To remind everyone that video of today's sessions will be shared with our global readership via our news channels and our website, including a highlights reel that we'll be sending out as soon as possible after the event. Our session today will take a big picture look at how sponsors, financiers, and investors are navigating the landscape across Latin America's energy and infrastructure sectors. We'll explore how new structures, blended finance tools are reshaping capital flows, how sustainability standards are influencing bankability, and what lessons we can take from some landmark transactions, which we'll hear about during the course of our discussion. Of course, we're gathering here at a moment when global currents shaping the flow of capital are colliding with the region's urgent need for energy transition, for resilient infrastructure, and for sustainable growth. Project finance volumes remain under pressure in 2025 amid persistently high borrowing costs, volatile capital markets, and political uncertainty, which have all combined to make it harder to bring deals to close. I think this also underscores the structural challenge facing the marketplace, which is how best to mobilize long-term investment at scale in a region where the demand for energy, transport, and digital infrastructure continues and is only going to continue to grow. But at the same time, the infrastructure agenda continues to offer a wide range of compelling opportunities for investors, as always, to add diversified, long-term cash flows to their portfolios. And we hope through our discussion today to explore those opportunities in different segments of the marketplace. The region, it goes without saying, needs to mobilize hundreds of billions of dollars annually to close the infrastructure and energy transition gap. The question is, how do sponsors and investors continue to raise capital and structure deals in an environment of macro headwinds on the one hand and persistent regulatory bottlenecks on the other? Thankfully, we have good answers to that very question from our superb group this afternoon. All our panelists have tremendous expertise in innovating and in getting deals done. I'd like to ask my panelists to briefly introduce themselves. We will start to my far left and work our way back.
Hi, everyone. My name is Esteban Uauy. I'm with Atlas Renewable Energy. I'm the head of structured finance and treasury for the company. Been with the company for a little bit over a year now. And, you know, thanks to LatAm Finance and to Tamer for hosting us. Thank you.
Hi, everyone. My name is Camargo. I'm with IDB Invest. A little bit more than 12 years already with IDB Invest, covering infrastructure and energy towards the Southern Cone, the Caribbean, Mexico, Central America. I'm very happy to be here, and thank you very much for the invitation.
Hi, my name is Sergio Robredo. I am with CAF since early 2020, and I was initially the head of structured finance and corporate lending, but now I am in charge of new businesses. New business understood as new products, new sectors to make the vice presidency of the private sector to grow. Thank you very much for the invitation. And I leave it here.
Good evening, and thank you for the invitation. My name is Alberto Estefan. I'm with Actis. I'm a managing director looking at our energy infrastructure investment program for Latin America.
And hi, everybody. My name is Benoit Felix. I'm the global head of structured finance for Santander. We are one of the largest infrastructure banks in the world, and obviously in Latin America, one of our core business. And we are doing basically financing advisory in all the sectors across all the countries from Chile or Mexico.
Thank you, Benoit. Thank you all panelists for your introduction. I want to start by taking stock of where we are today after a year in which, at least on the macro side, we've seen inflation coming off the boil and the interest rate cycle starting to turn, but at the same time, we're still in a relatively sluggish growth environment, certainly for Latin America and the Caribbean. I want to start with you, Benoit, just to help us set the scene from a broader perspective of deal flow this year, given that long-term capital is more scarce, tenors are shorter, refinancing risks are back in sharp focus. How is today's reality of higher for longer interest rates rewriting the math for project financing, and how do you see the landscape not only having changed over the past year, but looking ahead to the next period in light of some of these concerns I raised?
So I think we've been living different years within the year. We started with a very strong Q1. The macro was there, large optimism across the globe. Then obviously Liberation Day came in, changes a little bit the dynamic, and I would say the market stopped for a while. And I would say from a couple of months now, we are recovering from this radio silence. The market is quite active right now, so we are expecting a very busy end of the year. Now the dynamics are very different between the countries, right? You were mentioning some elections around. We're discussing with some colleagues just before here, the situation in Argentina, with an amazing first half of the year, and then now a big question mark. And I guess it's very difficult to navigate this beyond the macro, the individual dynamics of all the countries. And on top of that, you have to compete, obviously, amongst the regions in the world, right? So to your point in the introduction, it's quite easy to make good business in the US. The scale of the investment in infra here is like booming thanks to the AI. And obviously, this is a major competition from some markets, including Latin America. Having said that, you got a couple of sponsors here that will represent that. I mean, the infrastructure gap is there. The capital are still raised. And the emerging market funds will still have to deploy money in emerging markets and therefore in Latin America. So we are quite optimistic about the next couple of months with some interesting movement both in M&A and financing. As you said, the gap is there, will remain for the next couple of years. So the amount of investment will be there. And the good news is sponsors have equity to spend, banks have capital to spend. So it's just between brackets, about finding the right combination at the right price with the right risk profile. And I think we will discuss some solutions that are here to help to unlock this capital.
Thank you, Benoit. And what we're going to do is we're hear from each of you first on how you see the environment and the particular challenges, and we're going to talk about some of the solutions in different areas, in different sectors and geographies as well. But let's come to you, Alberto, and just to hear from your perspective. Obviously, Actis has a global vantage point across emerging markets. how would you situate LatAm compared to other regions in terms of the risk-adjusted returns and investor confidence right now?
Yeah, so our fund is a global fund, emerging markets dedicated. And so when we look at our footprint, Latin America has been 30 to 40% of what we've historically done. Other important geographies are the Middle East, Central and Eastern Europe, South Asia, Southeast Asia. And so kind of when you contextualize Latin America, as in why should investors care? On the one hand, it's a sort of a scale market, and if you compare it to, for example, Southeast Asia, the combined population of Latin America is about the same size. If you think about it from a GDP perspective, it's about the same size as India, no? So this is sort of a scale market. One that offers US dollar cash flows, no? Which is different to what you see in other emerging markets. Long-term contracts, inflation indexation, no? And so there are a lot of kind of features within the contractual structures that you have in infrastructure in Latin America that make it sort of an obvious space for people to spend time on. And it's a region that has sort of a track record of private sector participation. It started in the 80s and the 90s with kind of the Chicago boys going to Chile and the liberalization that you saw in the power sector. That sort of translates to other sectors as well. But the reality is that the region has been a pioneer from that perspective in, for example, the power sector, the development of the IPP model. And so it will continue to be, clearly for us, but I'd imagine for other investors as well, a key investment destination and one that probably punches above its weight if you think about kind of the overall macro headlines or its own GDP growth narrative, which isn't as compelling. No? But what you do find is, this is, for example, in the power sector, a space where you're growing at 3 to 4%, while in the US, demand had not grown over the past 10 years until 2024 through the AI craze. So I think that's a bit the opportunity. I think the challenge, and probably leveraging on what you said just now, is kind of people adapting to this new cost of capital environment. And from an M&A perspective, what we've seen is this is a year where a lot of assets and situations have come to the market, but many of those have not cleared, no? Because many projects were built at a time of very low interest rates. And so for sponsors to go out and divest in this environment, it's challenging given valuation watermarks, no? And so that's a bit the dynamic, but again, ultimately, we're very bullish in the underlying fundamentals of the region and in the infrastructure space in particular.
Great. Thank you for that, Alberto. And of course, we're going to be coming back to you to go a little bit deeper on that bullishness and what it actually translates to in real terms and practical terms on the ground in the region and going forward. I'll come to you first, Sergio, just to kind of pick up on what we've been discussing in terms of the challenges. Obviously, the availability of long-term capital is very much at issue, especially in today's environment. Do you see a shift in how financiers and investors are defining bankability when it comes to LatAm energy and infrastructure assets? And how would you, just picking up on what we've heard from Benoit and Alberto, how would you characterize the scope of the challenge today?
The scope for bankability
Yes.
of energy projects in
energy and infrastructure projects.
And infrastructure. Well, thank you very much, Timur. Well, I would say, first of all, is one thing to introduce is that CAF would like to become the Green Bank of Latin America and the Caribbean, and energy and infrastructure are a classic focus for CAF, no? In order to support the growth of the economy. Well, the challenges for bankability at this moment, well, in terms of energy, the most important thing that we are seeing is that the demand and supply are not closing in different subsectors, no? Well, because there are no, for example, and we can look this into the green hydrogen. We don't have demand guarantees at the moment. We don't have a contract for difference. This is something that that is being built. No? For example, the contract for difference are being built in Colombia and Chile. No, they are studying that in Colombia, for example, for wind, offshore wind, and in Chile for green hydrogen. And then, I think in Latin America in general, we always say that there is not a lack of capital in many countries, but there are projects that they are not very well structured, and projects that, they don't have, for example, this bankability point that is the contracted revenues. What I see as mega trend in the future are several. For example, the institutional investors. Banks are, at this moment, commercial banks lost a little bit the market share following the crisis of 2008, and we see more appetite for institutional investors. So we are trying to mobilize them with different mechanisms. We are working with portfolio guarantees in the Caribbean, for example, in energy and efficiency, and we have many opportunities we see many opportunities in different subsectors. No? We see that there are opportunities in the replacement of diesel engine buses by electricity buses, and we are closing transactions with blended finance. We see opportunities in of course, renewables, but in renewables that they need, for example, that they are the frontier at this moment. For example, the green hydrogen and derivatives, and we are starting to support the clients in the pre-FID phase in order to reach those projects to the financing phase. We are working as well on energy efficiency, and as I have said, also on critical minerals that we are starting to close the first transactions, and we need to find price floor of takes. And this is what we have found, for example, in Australia for different transactions. And we need to support also the grids and interconnections. No? And we have been financing some pipelines and transmission lines. So I see these trends, these new businesses that are coming in the future, and I also feel optimistic at the moment because we have many transactions in different subsectors, no? Of infrastructure and energy.
Thank you, Sergio, and very interesting about the evolution of CAF's role there. Right, has always played a catalytic role in infrastructure development, but now we're talking about mobilizing private institutional money. I think that's a very important point, and we'll talk a little bit about how best to do that, structures that can come to bear to that end. And obviously, Sergio, Mario, rather, at IDB Invest, IDB Invest has been pioneering blended finance structures in the region for many years. Perhaps you could just tell us a little bit about what innovations in risk sharing or concessional capital are proving most effective in terms of unlocking private capital.
Yeah, definitely. I mean, well, first of all, I think that it's important to mention that, within this macro concept that we've been talking about, IDB Invest is kind of counter-cyclical. So we are here to support sponsors and our member countries. So we're there, when things usually go south, IDB Invest is there. And we're also here for try to de-risk projects that otherwise, financiers or banks or sponsors would not do. For example, if we want to prove a concept in certain technology, or if we want to push forward certain initiatives, whether it is for climate related, whether it is gender related, whether it is technology related, whether it is we need a much bigger tenor than anyone else can take. That's where we think the blended finance component comes in, and we have a lot of examples in the region where we have used, a long time ago, you'd recall in Uauy, renewable energy projects were done with IDB Invest with blended finance. Now, all renewable energy projects, most of renewable energy projects, plain vanilla solar or wind, don't need blended finance. The concept was proven, and you can see the concept in Uruguay was proven. But we're seeing now, for example, in EV technology, for example, it's in order for the countries to achieve their decarbonization strategies, one of the main sectors to decarbonize is transport and mass transportation. For example, electric buses. Some banks and even some sponsors are reticent to invest, in electric vehicles at a long term, So blended finance, it's a great way to prove the concept and to trailblaze in order for others to chime in. Same thing with energy storage in many jurisdictions. We're seeing how energy storage can be de-risked with our blended finance. And we are one of the main, or I would say the main development bank deploying blended finance in the region. And we've had a lot of success in implementing it and de-risking transactions for others to come in and join. And that's just one part of it, but we also have another, we want to incentivize, for example, a certain, attitudes, for example, in the region towards, women employment, and that blended finance with its incentives can also do that to close the gender gap. Stuff like that, you sponsors that are here or that are watching us wouldn't invest in otherwise. So I think it's a great tool, and we're fortunate enough to have blended finance funds from a lot of European countries and also Canada to help us implement those riskier, let's put it that way, transactions.
Right, and of course now MDBs and DFIs are in the midst of a tremendous push to mobilize multiples of private capital. So I think this tool is going to be even more important over the coming period in doing just that. Thank you for that, Mario. And we'll come to you now, Esteban. Atlas has closed some of the most ambitious renewables and storage financings in the region. But there's often a tension between short-term flexibility and long-term stability in financing. How do you think about that balance when raising capital? And what would make sponsors more willing to commit to long-term financings? How do you see that tension playing out today?
Sure. So the way we look at it is that the tenor that we secure for our financings has a certain component of political uncertainty, of course, and the long-term view that you may take on a certain country. But as a sponsor, we're very committed to the long term in each of the countries where we are present. From the lender side, what we see is that tenor is more of a function of the bank's balance sheet and the cost of funds of accessing that long-term capital. The way that we see appetite from lenders towards Latin America, it's very high. So lenders are very much supportive of sponsored businesses in most of Latin American countries. Our company operates in Chile, Brazil, Uruguay, Colombia, and Mexico. And what we've seen so far is that banks are not conveying to us the lack of trust for the long term in the country or the lack of trust in the regulatory system in the country. They are conveying us a convenience of going with a mini-perm or going with short-term capital funding and share the refinancing risk in a certain operation, in a certain financing, rather than signaling that their concern is the long term and how things are going to look 10 years, 15 years down the line. Atlas this year has raised over $2 billion in credit products across our regions, and we've done that with the support of many of you guys sitting here on the panel. And you know, we've been fortunate to have a very strong pipeline of projects that have very strong off-takers. We have structured transactions in a way that fits the mold of the banks and how we allocate certain risk towards their balance sheet versus ours has been a very, let's say, academic effort in the company to say, okay, how are banks going to look at this particular risk, right? And fortunately, since you know the conditions of the financing market are fair and apply to you know everyone across the board, I think we've been fortunate enough to get our off-takers to understand those limitations and to accommodate structures such that we can place this financing in the market. So the short-term tenors for us are not necessarily a limitation. We see it as a way to you know find a middle ground between what the bank is willing to do for us in terms of cost of funding and risk allocation. And for us is sharing the risk and knowing that by building quite long-term relationship with our banks and you know having repeat business with all of them, we see that banks are not prone to you know hang you out to dry when liquidity or when the refinancing comes. So there's a relationship component there that as sponsors we're very fortunate to have and we cater for it you know with a lot of dedication to it. So.
Thank you, Esteban. I'm going to come back to you in a moment to talk more about your business and future plans. But I want Benoit to come to you just on this question of kind of you know short-term financing versus you know the possibility for or the willingness of the bank market to take long-term risk on balance sheet. I mean, and how likely this balance is to shift in your view. You know, and do you see refinancing cliffs as the biggest systemic risk in LatAm infra markets at the moment? And what's the solution? I mean, is it you know pushing more mini perms? Is it engineering capital markets takeouts early? I mean, how is this tension resolved?
So I think the first thing is I don't think there is a solution, generic solution for everything. And I think Esteban just described, you know, their view for the platform, and definitely is what we are, you know, from Santander, you know, fan of. And it's not because we are not willing to deploy capital on the long term. The problem we have, banks, is our resources are limited. And as Esteban was mentioning, they raised 2 billion this year. They've raised over 2 last year. They will raise 3 next year and 4 the year after. And there is no way that you know banks can just write checks, peel them on the balance sheet forever. So we need to recycle capital. And the view that we have pushed at Santander is that the perfect combination is a world where you get some risk and some structures that are put with the banks, for example, construction risk, flexibility, and then at some point of maturity, this risk or this financing should transfer into the long-term institutional money, which at the opposite of the banks can grow, and they need to deploy capital on the long term, and they can peel up billions every year. So the perfect world is actually what's happening in the region. Is you got banks, financing, I would say not short term, but short to medium, and then at some point you turn into long-term capital structures that investors can buy in. What we forgot to mention in the meantime is that the projects or the platforms are de-risked. Okay, so the profile of the risk is not the same when we are discussing, with Esteban in 24, and where the project will be in 27. So I think it's a combination of risk profile, capacity of the market to absorb volumes, and then I think it's quite natural to say greenfield risk is more for banks, brownfield long term is more for institutional money.
Mm-hmm. Yes.
Sure, go ahead.
Yes, I would like to make a comment on this. Well, regarding the mini-perms, what I see is that there are many banks and also some sponsors that they are very keen on mini-perms. Well, the banks, because they have a high capital cost, no, cost of capital from above 10 years. And the investors and the sponsors because they believe that perhaps they can refinance in better terms. No? And I think here one of the key things is or the key solutions are to crowd in investors that they are willing to take this this potential refinancing in the future, no? The institutional investors, no? And I really believe that there are some points that would be that would make this easier, no? For example, the standardization of contracts, no? The regional green taxonomies, no? For comparability among projects. This predictable regulation that we discussed in the past, no? We need these program platforms, no? That are that I would like to hear from the sponsors, no? Later on. I think program platforms are very interesting because they turn one-off transactions into a replicable factory. No? So in these cases, we publish a set of standard contracts with an eligible terms that says what qualifies and at what price, and the bank can onboard dozens of transactions under a unified platform. And in this case, you report the same KPIs for all of them. So with these standard contracts and all these KPI that can follow the progress, you can reference this on a portfolio basis. And the DFIs, we can provide guarantees, and we can step back if some institutional investors are willing to step in, that I feel that with these features they can be. Also, we need to manage risk tools, as I have said, with partial credit guarantees and curtailment wraps paid, if possible, by the grid operator. No?
Thank you, Sergio. Yeah, I mean, certainly there's plenty of scope to standardize the process in the way that you suggest, and also to achieve scale. And I think you mentioned the point about platforms, and that's certainly something that I'd like to raise, and perhaps we'll come to you, Esteban, and certainly want to hear from you on this as well, Alberto. But I understand. I mean, Atlas is currently in the process of trying to wrap up a major financing to consolidate its businesses into a platform. Can you tell us a little bit about that effort, what you're setting out to achieve, and how you see that proceeding?
Sure. Well, it is the case. We are, as a company, in an effort to simplify our capital stack and simplify our process and streamline our processes across the board. The growth of Atlas has been quite explosive in the last couple of years, and that has not been without complexity. For a company to manage 20+ loan agreements and the several hundred covenants that come with it, and the information requirements and the different geographies, different types of lending, that all comes at a certain operational complexity, and that in itself introduces risk, right? So our effort here is to streamline our capital stack, to simplify it, to make it such as our operational procedures internally are much more streamlined, are easier to follow. We have, let's say, taking Sergio's point, a more standardized approach towards our stakeholders, whether that being our shareholders, our banks, our communities, our internal stakeholders. In general, we want to try to make that simpler, easier to digest, easier to understand, and thus bearing a lot less operational risk on our side. Another point that is, of course, very, very clear is that, as Benoit said, like any institution in the world, our capital is not unlimited, right? So there comes a time where you'd want to also recycle some of that capital, refinancing, taking advantage of leaving behind construction in some of our projects and being able to seize the full potential of the assets. It's a very important component for the growth going forward. So of course, a big portion of this global refinancing, if you will, is to recycle our capital and be able to fund the growth coming forward for the company.
And what is the quantum that you're?
I'm not sure. I'm entirely allowed to say the quantum. I can say is quite large. I can say that it's wrapping up our stable long-term USD CPI adjusted cash flows in various jurisdictions. So,
and this is a Q4 transaction, or?
This is, yeah, hopefully yes.
Right.
So I think it's all about, again, simplifying our capital structure and recognizing that we have built a very strong platform of revenues that are long-dated, CPI adjusted, dollar denominated, and I think that has a certain value that we, with scattered financing here and there, is quite difficult to capture. No, so this is aimed at actually capitalizing on that stack of cash flows that are quite predictable and quite solid.
Right. Thank you for that, Esteban. Alberto, I just want to ask you, obviously Actis has plenty of experience in establishing platforms. From your perspective as a sponsor and investor, how does a platform change the way you develop projects and plan exits?
I mean, it's been super interesting to watch, because 10 years ago when I joined Actis, we were investing a $750 million fund. And what we thought of as platforms was we back a management team to pursue the development and the structuring of new assets. That would be a long-term PPA and a project finance attached to it. No? And then you do a few of these, and that would be a bit sort of the growth machine. It's great to see Michael Shea there. That was the early days of Atlas as well. And that has evolved quite a bit. No? And so now what we think of as platforms are these very large, more corporate-like vehicles that have more of an organic growth to it, no? Which is you build load or aggregate load on the one hand, you build your asset base on the other, and that are more sort of prone to corporate-like financings. And I think that's where kind of the capital markets avenue becomes an obvious source of capital that we've tapped through kind of the latest platforms that we've done in the region, which is something that we didn't do sort of in the early days, if you will. So it's been sort of an interesting journey to watch.
Great, thank you. Benoit, just for banks, aside from scale, how does financing a platform differ from a single project SPV? I mean, what's your principal consideration when taking a platform to a credit committee?
I think the risk profile is definitely probably the first one on the list. So we obviously have as well operational aspects as the one mentioned by Esteban. Putting 80 loans into one is good for everybody, I guess, on that front. But I think what credit committee likes is the profile of those transactions. So you're peeling up countries, you're peeling up project in different stages. So you can mix, brownfield with greenfield with development. You can mix, as the case mentioned, Brazil with Mexico with Chile. So the blended profile is definitely much better. And then the flexibility around it. So if something happens there, you can compensate with something else over there, right? And I think that's the beauty of all those platforms that will allow you to get towards more corporate-like kind of structure. Is that you're somehow stabilizing your cash flow from a global perspective, which I guess is good for both for debt and equity. And I guess a lot of platforms today are just in the middle of the transition, and this is where we can all together with DFIs and multilaterals and commercial banks work around flexibility towards those more corporate-like investment that would for sure at some point come into the equation.
And just from the perspective of the DFIs and the MDBs, are platforms more attractive because of diversification, or are they riskier because of cross-default risks?
We love platforms. We think they're a great way to diversifying the risk. It comes with its challenges in the sense of, for example, when we analyze the environmental and social risk of the different assets that you're trying to group in, but we've managed to navigate that, quite well so far. But we think that putting, a class of assets in a platform is actually great for mobilizing more capital, more institutional investors, and qualified investors to go to the capital markets. Investors like that kind of diversified risk, and they also like when we act as anchor investors. So it's we see it very positively.
Mhm.
Fantastic.
Yes, well, and I don't know if you want to continue with the program platforms or.
Do you want to jump in on that, or you want to? Yeah.
I wanted to add another thing that is related also with financial
Sure.
innovation, but yes, I think program platforms are super interesting, as we have seen, but there are other financial innovation that we are envisaging in the near future. We have been talking about the contract of differences and the efforts that Colombia and Chile are doing for offshore wind farms, and also Chile for green hydrogen and derivatives. The concept is very simple. Well, this contract of difference started in the 90s for financing commodities, FX and others, but now in the 2015 started in London as well, and the concept is easy. At the end of the day, if the market price is below the strike, then the seller receives, and vice versa. This removes volatility and lowers the WACC of the project. But there are other innovations. For example, I have mentioned the transition linked debt. No, we are working with KPI link coupons, and we choose a variable, for example, that we want to measure, for example, methane control or green hydrogen ready milestones, and there are incentives. So if the project hits the KPI, there is a step down in the margin, and if we miss the KPI, there is a penalty. So. Here, what I think is we can measure the progress, no, and the investors measuring this progress can underwrite, can do a takeout, no. So I think this is also a nice innovation at the present and in the future. We see also another innovation as green digital bonds. We are working on that with a platform, an Spanish platform, and then we want to generate cheaper, faster capital markets takeouts, because as I have seen, we need to crowd in institutional investors. So with these digital green bonds, we have real-time impact reporting as well. And I think it's quite interesting, as well as securitization takeouts. We are working in Colombia with a bank that is downloading in a securitization fund, and we are acting as a senior investor, and we are attracting institutional investors in the senior tranche. So there are ways, innovative ways to the risk, to, at the end of the day, to attract these institutional investors. I have mentioned the portfolio guarantees with energy efficiency as well, providing these partial credit guarantees or first loss guarantees to banks that they have many loans of energy efficiency that they are too small for us to diligence one by one. And this is another way to the risk and to crowding private balance sheets.
Thank you for that, Sergio. Certainly a lot of food for thought and a lot of innovation there that you mentioned in a short space. We'd love to go into more detail on any one of those, but we'll save that for another discussion. But certainly a lot of very interesting stuff there. We just don't have a lot more time left, but I wanted to come back to you, Esteban, just to talk about an issue which is certainly impacting your marketplace, and that's the issue of curtailment for power generators, and how that could ultimately hurt investment in the renewable sector. in the region. And if you could just give us a quick sense of what impact it's having on your investment and funding strategies, and what measures need to be taken to kind of really address the curtailment issue, which is profound in its impact.
Sure. So I think out of our markets, there are two that are notable for curtailment. One of them is Chile. Chile curtailment in itself, if you have the right contractual structure in a renewable energy asset, it's not a problem in itself, right? In Chile, curtailment equals to zero prices in the grid, right? So if you structure your contracts correctly, you should be able to source the energy that you have committed to deliver at a zero price or close to zero price, and of course your biggest impact is the energy that you have not committed to deliver under a PPA, and you are unable to inject and sell at a market price that is different than zero, right? I think Atlas has been quite sort of conservative in how we structure our contracts. Currently in Chile, I would say that curtailment is not a very big problem for us. We have steered away from distribution company PPAs, for instance, which are the most affected ones for curtailment. We have put together structures with our off-takers whereby we are able to source the energy from the grid at a competitive price, and we have, of course, built in cushions around the financing and the ratios that we use, such as, still have a very sound financial profile despite curtailment, right? Different story is with Brazil, right? So Brazil curtailment doesn't work exactly like it works in Chile. Prices do not become zero, and contracts are, I would say, not prepared to handle curtailment. They are not structured in a way that we could go around it, right? So in Brazil, what we're basically doing is managing curtailment commercially, because it's a problem across the board for all generators, all renewable generators. Of course, stemming from the big penetration of DG, of distributed generation, that I think is affecting many players. So I think there's a sector effort to solving curtailment in Brazil that I think it's already yielding some results, right? There's also a very clear incentive, both from the government, from the likes of BNDES to support and allow us as sponsors the time to find the solutions, right? So when it comes to financing with BNDES, for instance, it's quite clear they are aware of the issue, they are supporting us, they are, let's say, they're taking our problems and making it theirs in a way, and helping us, navigate these difficult times. I would say that the future looks bright in a way. I'd say that the willingness that we see from the political sector to tackle the issue in Brazil in the short term is very good. I think now is a matter of how it is handled and how sustainable the solution that we find is in the long term. So for now, there's always the possibility of sort of back charging curtailment, getting some type of refund from the system that ultimately is partially paid by the owners, partially paid by the authorities. So I would say that the short term looks okay. It looks like a solution should be found in the next couple of months. But the sustainable solution to curtailment, of course, is a very strong development of the grid in both in Chile and Brazil, right? And this is where sort of we are counting on the governments to sort of realize the potential that renewable energy has, and we're helping them realize that it's very important to have new technologies such as BESS being deployed, having a very clear set of rules for BESS to be for battery storage to be deployed, and helping us sort of move away from those solar hours, right, which are more problematic and service the demand in different times. So I think it's a matter of time when curtailment is not a thing of the past, but is severely reduced.
Sure. Severely curtailed, one might say.
Yeah.
I was going to ask the same question of you, Alberto, but we don't have time. I do, however, want to ask you in a minute or less, just to kind of just tell us what's next for Actis in the region, whether you're now looking at conventional energy projects in the region, and whether there's more appeal from or demand from investors for traditional energy, or those that blend energy from renewable and conventional sources, right? Especially with thermogeneration. Providing more stability to grids and so forth. So what's next? Yeah.
We do have the appetite for that. So very focused on deploying our sort of new fund vintage. Our Fund 5 vintage has been sort of deployed through the platforms that we have in Mexico, in Peru, in Brazil, and now looking to deploy the new fund. And kind of as a theme, what we see for this new fund, a key theme, I would say, is how do you deliver a complete solution to the systems where you operate and to the users that you serve? And that in the power space in particular is something that you do through the combination of technologies. And so we see kind of these diversified and integrated IPPs as winners. And so gas does have a role in that, we think, alongside many other sort of technologies, and with batteries and solar being the long-term winner. But yeah, so in this fund, we are looking to gas to power as well.
Very good. We're practically out of time, but I just want to ask each of you to sum up your perspective, looking ahead to the next 12, 18 months. What your priorities are, and we'll start with Benoit, and we'll work our way through the panel.
I think I will copy my neighbor. They say our key objective is to serve our clients and bringing the right solutions to their problem, which will probably ended up aligning different solutions, capital solutions, banks solutions, institutional money solutions, senior, holdco, METs, pref, whatever is needed to make it work. And I think the big hope on our side as well is to reopen some markets, such as Argentina. We've closed earlier this year, probably the first PF in many years. There is a kind of hope that this would continue next year. There's a lot of things to do in the region. And then we will probably on our side as well invest much more in some new asset classes, such as we talked about the critical minerals. That's something that we should tackle. It's a huge potential for the region, and we need to deploy ideas and brains to make it happen as well.
So yeah, from my side, back and grow platforms in Latin America, and so Mexico, Brazil, the Andean region are the scale markets where we spend most of our time. But yes, very actively originating new deployment opportunities, while the capital that we do have invested in the platforms that we currently own are going through their sort of harvesting and value creation phase.
Yes. Well, our focus would be to fill in the market gaps wherever we can add more and it's more needed. For example, we are working on green hydrogen projects and derivatives. We think we need to attract also concessional financiers to them. No, as Mario has said, this is as it was renewables 20 years or 30 years ago, and then we also need to support under the Emotion program the replacement of diesel engine buses by electricity buses. We need also to work on these transition energy minerals, energy efficiency, and we are sorting this out through guarantees, well, also to support the interconnections, no, to transport green hydrogen and electricity, and to start working as well on the batteries storage PPPs and private projects. No? Thank you.
Thank you, Sergio. Mario.
Yeah, from IDB Invest perspective, I mean, just want to leave one message. We are in the middle of a capital increase where we are growing exponentially, and we are tripling the amount of transactions and the amount of money that we are investing in the region. So what we're going to focus on is on bringing in as many bankable projects to the market, and how we do that is as a development bank, we also work with the governments to structure those transactions, to structure those deals, to have a regulatory framework that works for the private sector with bankable projects. So what we're trying to focus on is on making sure that the deals that we bring in and where we act as an anchor investor and we try to mobilize as much capital as possible are bankable, sustainable, and have the right development impact for our member countries.
Thanks, Mario. Esteban.
Thank you. From our side, we're very excited of what the next 18 months can look like. We're definitely very excited by on the relationship building side with our off-takers and harvesting and fostering the growth of their business as well. So we're talking data centers and mining companies, steel mills and iron ore producers. Generally, we're in the business of selling energy, but we have to sell it to someone, right? And fostering and promoting the demand side and coming up with solutions to our clients' problem is the most important part of our next 18 months. So we're very excited to jump into those sectors as we also look to develop those from a regulatory standpoint.
Great. Thank you very much. Well, we look forward to watching that journey very closely, not just yours, but certainly for all our panelists and everything that we've talked about during this very interesting discussion. And I just want to ask you all to join me in thanking our panelists for a really superb discussion. Thank you all.
Thank you, Tom.
And I'll ask the audience, please, to stay seated as we move to the next portion of our program, and we're back to back with two quick takes. I'll ask my panelists, you're welcome to leave the stage, and I will introduce our next speaker. Oh, one photo. First speaker is Managing Director of the state-owned national oil company of Suriname, Staatsolie, a company that is poised to play a key role in the next phase of the country's growth following significant oil finds offshore. It's an honor welcome Annand Jagesar to the stage to give his quick take on the future of the energy sector in the region.
Thank you. Good evening. Good evening. You hear me? No? Evening. Testing. Yeah, I think we are good to go. No? We're good? Okay, great. Thank you for the opportunity to present to you the next energy frontier, which is, of course, Suriname. For the banks, the disclaimer is mostly much longer, so I'm not going to read that out to you. Yeah, we're a culturally diverse country with a lot of beautiful people that you know, and we live in peace together, always have been. The next one is, oh, sorry, I needed to show this one. So you see our people in Suriname. We have people from Africa, India, the original Amerindians, of course, Chinese, Dutch people, Indonesians, all of them are in Suriname. And then maybe a little bit on the country itself. We have like only 640,000 people, 15 languages spoken. We are the world's most forested country with 93% forestation. And we have a GDP currently of 4.5 billion US dollars. We have a high level of biodiversity, and we are, with Panama and Bhutan, the only 3 countries in the world that are carbon negative. We just completed a successful IMF program as of March 2025, and we currently have a very poor rating with Moody and Standard & Poor. Then maybe on the company, very brief. We were founded in 1980. We are integrated, so we are looking for oil, producing oil, transporting oil to the refinery, refining it, and selling it to the customers. We also have a power business, so we use the heavy oil to make power, but we also have hydropower, which is, I think, supplies like 60–70% of the country's need. And we are also financially participating in the gold business. And later on, I'm going to tell you this gold business is like a perfect hedge for oil prices. Oil prices go down, gold goes up. Other way around, you have the opposite movement. We have like 1,200 employees. I think for a national oil company, this is a key success factor. Not becoming the employer of the government, but just keep the right number of employees. So very low number, and we spent a lot of in CSR. In the middle under, you see the contribution to the budget of the government, very high. Like it's between 30 and 36% of their revenue, of the government's revenue, one single company. I think in the Arabian country, the only countries that it's higher. And in numbers of the GDP, also impressive. Okay, what's happening in Suriname? I think this is the big thing. So Block 58 is currently being built, the project, Camargo project. The FID was taken in October 2024, and the project has progressed for 23% currently. So right on time, within budget, very well executed. And then we have Block 52, a lot of discoveries there, gas and oil. So probably Petronas will take a decision on the projects there soon. And then we have a number of exploration wells in Block 64, that's up there. In Block 5, that's a little bit below. And in Block 65, we're going to drill. We have like 4 billion of discovered resources. This year, a record number of exploration wells, and more to follow in 26. I think in 26 or 27, Total is also going to drill in Block 58 because there's a lot more potential in Block 58, which is a prolific block. And a lot of other stuff going on, and we think that we can still find 30 billion barrels of oil in the remaining acreage. This is a nice picture of the Camargo project. So you can see the ship and the subsurface. So on the ocean bottom, the infrastructure and all the lines that go to the wells. It was just made for people to understand. And then below in the nice colors, you see the reservoir. So the oil is pumped up and water and gas is pumped back into the reservoir to keep the pressure. Very nice project, 2 main pools of oil, 650 million barrels of recoverable oil. And first oil will for sure come in 28. And nice concepts are we're using the same contractors as in Guyana. So these guys they know what to do. All their projects were completed within budget and ahead of time. So we hope that we are ahead of time as well. We invested a lot of money to keep the emissions low. I just heard a lot of ESG insights. And development risks are mitigated by locking in the contracts as early as possible. All big contracts are locked in, so price will not fluctuate there anymore. And then local content is, of course, very important for Suriname. Then we have Petronas. Like I told you, it's the block adjacent to the Block 58. You can see in the red outline the Slonea well, which is the gas project. It's 3 TCF of gas in place, and we expect what they call declaration of commerciality at the end of this year and the FID at the end of the next year. So we'll be on the market again to look for financing, to finance that project. It will be the first floating liquid natural gas project in the region. And then they also found oil, I think, to the left of Slonea, and they're currently drilling appraisal and exploration wells to see how they can go into a development. Okay, and then a lot more promise for the future. The green belt that you see in the middle, that's what we call, in Guyana and Suriname, we call it the Golden Lane. That's where they found a lot of oil. But what we are doing as a national oil company, we're trying to look beyond the Golden Lane and other places in the offshore to find oil, which is not easy, but we do our best. And of course, Suriname has a very stable regime. Never was a company nationalized in Suriname. We have always adhered to contracts. We have defaulted sometimes as a country, but never breached a contract. And then, of course, soon we'll be opening the remaining blocks for business. Okay, this one is a nice one. This is Guyana. So if you want to see what will happen in 3 to 5 years in Suriname, you should go tomorrow to Guyana, because this is already happening in Guyana. They're like 5 years ahead of us. A lot of infrastructure, a lot of hotels being built, and you can see them. Qatar is also looking to build a hotel there. Sheraton. Their gas to shore project also very interested, so they build a pipeline to shore to make power in Guyana. Also interesting. Marriott is there, Ramada is there. The Ogle airport, which is a very nice airport in town, is being completely expanded. So yeah, they're working on everything. And then of course, their main airport is also being built. So all these things will happen in Suriname as well. They're building hospitals and what have you, and then people, the banks need to look at that, because there will be a lot of need for fresh money. And then, of course, if everything goes well, we hope, oh yeah, this is the main airport, 2 pictures of that. And a lot of people flying to Guyana right now. I think in the past, there was only 1 airline flying to Guyana. And within a couple of years, almost everybody flying. You have direct flights to Toronto, Houston, New York, and what have you. Okay, and if we do well, then hopefully Latin America will look like this all over the place. Thank you.
Thank you. Thank you for that talk, and we certainly look forward to observing the development of Suriname in the coming years. We come now to our second and final talk, this time from a seasoned CFO who's held a number of senior roles across his country's corporate and financial sector over the course of his career. Please welcome Telecom Argentina's CFO, Gabriel Blasi, to the stage to give his quick take on financing Latin America's digital future. Gabriel.
Hi, good afternoon. I was asked to talk about the digital revolution in Latin America and how are we financing it. The first issue I think is relevant to share with you is why Latin America is interesting as a place of digital revolution. The main reason is Latin America is a place where all the new practices on the digital side are very early adopted. All our countries very easily are users of this type of technology. And this is posing a huge opportunity in terms of additional investment. It is true that also we have significant gaps in terms of the infrastructure. That also provides an opportunity. Still, we need to improve our networks. We need to complete deployment of 5G, of fiber. All that connectivity improvement is critical for the digital evolution of the economy of all these countries. But still, at the same time, this provides a huge opportunity in terms of additional investment. As more of you know, this is a capital very intensive industry that requires significant amount of capital, and the very different segments that we are approaching today means that almost all sources of capital and all different type of structures are being used. In terms of what are the most relevant segments that we are looking at today in Latin America as a whole, beside the fact that all the connectivity brings, according to GSMA, 5 points of GDP additional growth to all of these countries where connectivity is properly placed. We have different drivers that are improving our possibility there. Number one, of course, is the infrastructure, implementing of 4G, 5G, and the towers, and additional fiber, or this requires significant amount of capital and structures of project finance. We have been extensively using multilateral agencies that have a very significant role on the risk profile of the operations. The second aspect, which is relevant and growing, is data centers. As you may know, the implementation of AI, the requirements of energy, also another significant drivers in terms of investment requirements and in terms of growth of the industry. Also an important trend that we are facing in all these countries regarding where these operations are located. Some of them are being moved to the edge of the network to reduce the amount of connectivity, placing the contents nearer the final users. In other cases, the data centers are established in places where the situation or what is called the nearshore, bringing them closely to certain areas or certain advantages, make them more profitable, especially regarding the availability of energy, which is a critical aspect of these operations in the futures. We cannot live beside all the digital revolution or all the fintech environment, business of the fintech business and all the fintech ecosystem in the region is growing very significantly, very strongly. Companies like Mercado Libre, Nubank are world-class and moving ahead quickly and changing the way a lot of different businesses are shaped. And again, different type of structures. I'm going to refer to very quickly to the financing different systems that we use for this. And finally, other drivers relevant are more in the near future regarding to the digitalization of public services. This is health tech, edu tech, which are coming quickly, directly related to connectivity. So with this very wide spread of opportunities and services and a very strong demand that the region posed. Where do we get the money from? All the different uses, because the risk profile of each one of these business is very, very different. So we have private capital, venture capital, which has been very deeply investing in infrastructure and on the fintech business especially. This goes especially on the telco and on the banking side of the business. Infrastructure funds have been heavily investing in all the infrastructure of the industry. A very special point regarding multilateral agencies and public agencies regarding instances like IDB, IFC, CAF have been very significant, especially to reduce risk. This has been the umbrella that has allowed, for instance, companies like Telecom Argentina. At the beginning of this year, we deployed in 15 days $1.2 billion to acquire a competitor, Telefónica from Spain, and 3 months later, we issue a bond in international capital markets. So really, the presence of these multilateral agencies is critical for the development of the industry, especially on the risk profile of the different financing, and especially for the project finance. International capital markets, here we are heavy users. All the ESG trend and all the inclusion has also been very relevant for the multilateral agencies, and green bonds are making their pace slowly but firmly in this environment. And again, you have all the, I will say, all the different type of infrastructure in Mexico and in Brazil. You go to debentures and to other type of mezzanine financing for different aspects of the digitalizations of the economy. So really, the type of instruments that are used are very widespread and all of them very, very well developed. Other challenge that we face is regarding the regulatory environment. As you know, the options that each country does from time to time to provide additional spectrum. As you fulfill a spectrum, you need to go to a different band. This requires additional investment, not only in acquiring the spectrum, but also in deploying or adapting the infrastructure to go with that spectrum. 5G is a very near example, which is not so relevant for us as common user, but especially for the corporations regarding automatic control system, autonomous system. There, 5G, because of the lack of latency, is much more relevant. That's an example how the regulatory environment might additionally require capital in these operations. Some countries are also creating the need of a uniform public service. This is to close the gap in terms of access to connectivity for all the population. This is also another source of additional investment. Two very special issues that are relevant for the industry as a whole and for all the companies intervening in the economy. One is the privacy of the data, where the data is located. Just an example, for instance, all the financial data, most of the central banks of each country provide regulation that may not legal to have the information of the customers outside the boundaries of the country. All that type of situations is putting additional, I will say, challenges to the environment to develop the business. In that sense, the final aspect, which is very relevant in this, is open finance as a concept and the fintech environment put a very significant challenge in terms of cybersecurity, which is growing more and more. We have on the cybersecurity environment, we are having additional requirements from the regulatory point of view, and not only for the companies itself, but to safety of all the operation, especially on the financial one. This all brings a lot of new measures in terms of how we deal with this type of new businesses, new ways of looking at the operations. But the risk that these businesses have probably with the exception of cybersecurity and the privacy of data and risk that we know. The most relevant risk that we face, and Argentina is a very good example of that, of course, is foreign exchange risk, where different type of coverage is adopted. In many cases, the coverage is provided by the same infrastructure, by agreements directly done in hard currency. Other aspect that is a risk-relevant situation is regarding the government regulatory environment. It's critical to have good MOUs and a good frame of policies. Also, again, using the example of Argentina, we are in the middle of a big merge with a very constructive conversation with the government regarding the acquisition of one competitor. Is critical for the market how these issues are addressed, and also, again, the presence of multilateral agencies provide a good cushion to deal with this situation. A very important aspect, and is one of the biggest costs of the industry as a whole, is energy. Energy costs are very, very relevant. For instance, in the case of Telecom Argentina, after labor cost is the second relevant cost, and the provision of energy, especially to data centers and all the AI complex business related, is going to be a very significant risk, especially the provision of stable sources of energy and in terms of prices too. The inclusion of green energy and long-term contracts is becoming more and more relevant for the industry as a whole. Finally, some trends that are relevant for the industry and the near development this year. Well, of course, AI has been, and it is, a very significant trend. I can mention a couple of examples of ways that is affecting us. For instance, Telecom Argentina is a company that has been listed 30 years in the New York Stock Exchange. At present, thanks to AI, we generate our own IR information with the style of each company that covers us prior to the release of the result, in a way to understand what type of questions we are going to have. Some type of use that is not so intuitive. Other use, we operate in more than 5,000 jurisdictions. All the services that we receive in terms of energy and other utilities are through AI, automatically received, controlled, accounted, and paid. All this without intervention of any person, and is done directly by AI model. So really, all of us are affected with this trend. Another important trend is the nearshoring or offshoring. This is the movement of the data centers to the different operations. That's creating additional investment opportunities and additional investment requirements. Open finance and I will say, transformation of the international payment system, which is really a very strong trend in Latin America as a whole. Instantaneously, if you recall, most of us were used that the money moves on a daily basis, on a batch process, and then it's accounted. Today, we are moving the money in seconds, and we are creating money by digital means directly by the speed that the money moves. This has a lot of additional implications in terms of how the monetary policies are achieved, especially when the amount of digital payments are so strong as they are in Latin America. And then, as a final comment to share with you, finally, when we look at our shareholders, the different ways to provide them with additional value in this environment so changing and so demanding in terms of additional capital, a lot of M&As are happening in the region with a very interesting trend. We are not receiving too many capital outside the region. There is a lot of things happening between investors on the same area. This is Latin America is moving a lot between locals. Lot of locals are buying companies, are merging companies inside the region. We have done that at the beginning of this year, just as an example of a trend that is repeating in every country. That's a way of providing additional value to shareholders. In our case, we are repairing the market by bringing value operations that were lacking of a strong investment. This is very, very easily seen on the telco environment, hyperscalers. Other aspect that is being used, of course, is the listing and opening the capital of the companies, and finally, the sale of assets of different types to infrastructure fund. So as you see, the industry is very healthy. We are in the process of improving and adding additional businesses, helping to provide the huge demand in terms of connectivity of digital services that our different countries are demanding. And as part of that, all the different type of instruments and players are taking part in this very significant change that we are all facing. Thank you very much.
Thank you, Gabriel, for that very comprehensive perspective and a lot of food for thought, certainly, for all of us to take with us now to our cocktail reception, which all confirmed guests are invited to join us for the reception now. I just want to take a moment again to thank our speakers for taking the time to participate this evening, and of course to our sponsors for allowing us to put on this event today. We're very grateful, and we hope you've enjoyed it, and we look forward to continuing the conversation over drinks in the cotillion room. Thank you very much.